The MoneroTopia Price Report segment is sponsored by Exolix, a privacy-focused, non-custodial instant crypto exchange. Go to exolix.com to enjoy secure and completely anonymous swaps with no KYC or sign-up. Swap between Monero and 2,000 plus assets at the most competitive rates and with no limits. Exolix.com, your fast and secure way to privacy.
Morning, guys.
Good morning. Good morning.
How's everything?
Lucifer is asked. It's going all right. I just want to. Lucifer says, is there a way to buy Monero anonymously with prepaid Visa cards, etc.?
CakePay. CakePay.com. You can do it outside of Cake Wallet, or you can do it inside Cake Wallet in the app.
Well, he's not saying to buy the Visa cards with Monero.
Oh, he's saying buy. I literally read that. I interpret that backwards.
Yeah.
My bad.
Yeah. So Cake does have that, which is useful. I mean, so buying Monero with prepaid Visa cards, I mean, short of selling them on XMR Bazaar or, I don't know, swapping them on Havino, can you even do that? I don't even know.
Possibly. You're going to be racking up a lot of fees, though, because those prepaid Visa cards that you buy in the store usually have like really large fees. Like you're paying $7 for a $100 gift card, something like that. So that's probably not the best way to, if you're trying to get a bunch of Monero anonymously. I would just look at Havino, see what you're able to use. Like you can do private trades using something that has like little to no fees, like sending someone some money through Zelle, or even sending somebody cash by mail if you really want to do that. So,
and I will say, after last show, and obviously it's something I've been thinking about for a while. So going to try to ramp up the use case of buying Monero with cash on XMR Bazaar. They've kind of doing it in a way. Obviously, we're completely hands off as a platform, but putting together people that are looking to obtain Monero for cash and people with Monero that are looking to sell it for cash, bringing those parties together, using the map to do so. So kind of like a local Moneros feature on XMR Bazaar. So we will be working with on that soon. Probably get it up and going. People already kind of use XMR Bazaar a little bit for that, but I never really pushed that narrative. Kind of. But now I don't know. I feel like if done the right way, there's no reason why we can't do it, especially given the environment we're in right now here in the U.S. So
it's getting a little better, but
yeah, I mean, I don't see any reason why we can't have listings that are bringing together people that have Monero, that have a need for obtaining cash, and people that have a cash that have a need for obtaining Monero. Not that they're in the business of doing it, right? So it's literally just going to show, Tux on a map. If he choose to click on that feature, he would be displayed as, a Monero local in his area when he wants to turn that on. So he'll be bleeping on the Monero map when he turns that feature on. He can turn it on and off, and it would show him as a Monero local that's either that's looking to trade Monero for cash or cash for Monero, and then let the parties meet up. Chat privately through XMR Bazaar or off XMR Bazaar, and then they can leave reviews for each other and let it work it out that way. So, Bodhi, sorry about that for interlude. I will let you take it away, guys. Use xmrchat.com. I see we got a lot of chats coming in, but please do use the super chats. xmrchat.com/MoneroTalk. Please send your Monero-based super chats. Doesn't have to be a lot. Use Monero.
Yeah, I think actually that's a good. This is the price report, so if people are trying to buy and sell, I think that's a totally reasonable topic to start out with. So.
Yes, yeah, we need. That's also where we need more work. Obviously, people, we're working on things. We're working on Sarai. Havino looks like it really is flourishing. I'm sure we'll talk about that later. I think in the news. Supposedly past Bisq in terms of volume. That's huge.
Nice. Wow.
But I would love, just like Drunk Dial me, he has this vision in his head. Like I share that vision. Like that would be beautiful. It would be beautiful if I could, in New York, I look at my XMR Bazaar, I look at the local Monero map, and I could see a little bleep that's within 5 miles of me that's like willing to sell Monero for cash or vice versa. I could roll into Mexico City, and there's five nodes popping up on the map. I roll into Rome, wherever it is, right? And I could find the locals, every city at this point, every major city at this point has a couple of locals that would be willing to be a node, and willing to exchange Monero for cash. I think we're at that point. So,
have you ever thought of the possibility of doing like a Haveno meets XMRZR? Where it's kind of like it evolves into more of a peer-to-peer platform like that.
Yeah, you mean like to kind of slowly make XMR Bazaar more decentralized?
Yeah, exactly.
Yeah,
like
yeah. I've thought about
people are just connecting
Yeah.
to each other, right? There's not necessarily a centralized, like there might be a front end. There's different front ends that are running, but like there's this back end component to it, right?
Yeah, I'm definitely open to it. I mean, for me, it was just obviously there's benefits with the way we're doing it right now, is that it's super easy for us to get it up and running, right? And then for us to add features and for users to access it, right? It's very accessible right now. You don't need to run a client or anything. Yeah. You just go to a website. I mean, ideally, yeah, if we could shift towards being more decentralized but not lose any of that, definitely open to doing that down the line. But right now, I think it kind of serves a niche. I don't know. What do you think? What are your thoughts on it, Bonnie?
Yeah, I mean, I think it is easier to launch a centralized service, and it makes a lot of sense to just get it going. At some point, maybe like it could be, maybe it even becomes a necessity, right? Depending on how things evolve, right? How the whole situation evolves. Hopefully not. Like, hopefully it just never becomes necessary. But it could be useful.
Like, so does Haveno, you basically always have to run a client, right? Or no? Well, obviously the idea is they're trying to like build apps that would allow you to basically use it without running the software, right?
Yeah, I mean, there's obviously you can run a client. I don't know if their website acts as a front end in some cases. That seems to be how a lot of DeFi is actually built, though. You've got like this back end that's running permissionless, trustless, whatever. And then there's kind of these different front end servers, and they occupy the front end servers sort of occupy this gray area where it's like, well, we're not actually processing, all the transactions on the background or the order book. We're just an interface into that back end. So,
right.
And it seems like there's at least some level of extra legal protections afforded for people operating that way.
Yeah, it's definitely not worse, right? It's definitely better in terms of, yeah. I mean, I look at it as, we're the Craigslist of Monero, right? As far as I could tell, we should be allowed to do that, at least here in the U.S. Obviously, if it gets to a point where it's relatively easy for us to make it more decentralized without losing any of its usability and accessibility and permissionlessness, where anybody can easily access it, then yeah, I guess we would try to make that switch for sure. Why not? I mean, I do like the idea of it being a business, though, where it has income, right? Because like how, that's right, kind of like what we were talking about originally in this when we started off the show, like Monero's funding system and developing things. Like, how is Haveno like originally had built into it, right? The fee structure where money would go into a treasury for development, but I think they like deprecated that, right?
Man, I don't know.
Yeah, I'm not too sure, because my point being, like with XMR Bazaar, I want it to be a profitable business, right? So, capitalism, right? Like, not to just be some like utility that's run by a bunch of communists. I want it to flourish in a marketplace and actually add value, and with that value be able to like use that capital to make more improvements and make it bigger and bigger and bigger, right? So that's my other thinking. Like, I guess if you do it in a more decentralized way, that doesn't negate that, right? It could still have, but at that point, what are you really decentralizing? Because you're saying, hey, look, we're the people in charge of this thing that's supposedly decentralized. So you get what I'm saying? Like, is that right? So then you've kind of like negated the whole need for decentralization if you're trying to run it as an actual company that has generating, income, and
Yeah.
then putting it back in, right?
You're more of an agorist than a mutualist, I suppose.
I don't know. I just feel like there's more that can be done that way, right? Like you could take the capital that's coming in and continue to iterate and put that and develop it. Otherwise, it's just like you're waiting on the community to step up and contribute to it, right? And we have that. We have that's what Havino could be. That's what the Monero protocol itself is. But I mean, look at Cake. Look at the success of Cake. Cake is successful because it's a profitable business, and then it keeps rolling its money back into improving and growing.
Yeah, definitely no hate for capitalism here.
Yeah.
Or we could call it agorism if we got any ANCOMs that are buttholes are tightening up when we say capitalism. You just say, all right, agorism, bro.
So that's what I'm saying, right? So if XMR Bazaar is going to be that, then I guess it doesn't make sense for it to be decentralized, right? Unless I'm missing,
that I think that, but I mean, you could still hypothetically, you could still have an address that that some little fee goes to to an XMR address, and you're like, hey, it's a decentralized system, but it comes pre-programmed with this kind of thing. I mean, hypothetically, you could go and change that and compile your own code if you wanted to and remove my profit address, but no one's going to do that. Like, no one goes to all that kind of trouble. So you could still I think you could still do a little bit of capitalism there on the decentralized model.
Yeah.
It's just an idea, right? It's just brainstorming.
Okay.
I haven't
thought
that through.
I appreciate it, man. And I look to you guys to help steer me in the right direction. I'm always taking in input. XMRE tipped 25 cents. Love the show. Happy to watch live for once. Yeah, thanks for tuning in. Thanks for the tip.
Guys, smash that lick button. Give us a lick.
Yeah, retweet. Let's get a bunch of people here on X tuning in. This is going to be exciting. Big week, another big week, I think, I would say, in price. Like, where are things headed? Are we about to fall off a cliff? So price report should be fantastic, as always. And I am excited for Jackie. I see him backstage. He is real. He's not an AI. I see a person, unless he's like a really good AI. So if we were betting, if there was a betting market as to whether this project is legit or not, it just ticked up a little bit in terms of being legit. In my mind, we shall see. Buddy, take it away, and then we'll bring Jackie up on stage.
Cool. Yeah, we've got XMR chart in front of us. This should be a very familiar chart for everybody. We're sitting here right around $213. Like I kind of predicted previously, we're probably going to need a lot of consolidation time in between the two blue bands right here. So that blue band and this blue band, this is typical price action. The way I'll see it unfold is you'll end up doing some oscillation, and then you'll break towards the upside if price indeed has fundamental positive pressures behind it. But then again, it's no stroke of genius to say that Monero's price is going to require some long period of stability before doing something as we poke it with sticks. So if we could just get, I don't know, we just need some billionaire that wants to get, or multi-billionaire that wants to get into Monero. I don't know where all the multi-billionaires are that are ignoring Monero, but shame on them. Shame on all of the billionaires ignoring Monero, which is all of them. Although they're not totally ignoring it, some of them are fighting against it, as we well know. So, anyways, Monero's price basically stable as always. I mean, the chart looks good, right? The tea leaves, the astrology for dudes. This looks pretty good, right? Like, honestly, this is good price action. I still, if things are going to fall in some major pointed crash event, then Monero is going to fall with it. But if the markets are going to fall slowly, if they're going to wander down over the period of the next 6 to 9 months, it's totally possible, guys, that Monero could play catch up during that time. Because we've just seen during bear markets, Monero performs better than everything else during bear markets. So that might actually be kind of, I don't want to say a silver lining, because I was actually hoping for a very pointed macro crash. I was really hoping that's how it was going to play out. And then as it starts unfolding, it's dawning on me oh crap, this is actually this is more of a fundamental structural problem with the economy now, and that's more likely how it's going to unfold. But over the short term, I'll tell you right now, just at the beginning here, to lead off the price report, I am actually mildly bullish over the next week or so. So I don't think we're crashing over the coming week or so. I think this thing is going to be a protracted event, and I think we're going to see it come to a head maybe later on this year. So, but for now, let's take a look at all the charts and see where, see if we can give some very highly dubious speculation on where things might be going. And obviously, I've got my crystal ball here, so I'll just let you know what it tells me. Ask fucking Voldemort or something. And yes, I know those mixing up. Anyways, so here we go for Monero versus Bitcoin ratio. And yeah, it's really good, actually. We're kind of hanging out here at the top. It's starting to look a little bit like the XMR versus the US dollar, where you kind of go from this low area down here, and then you just end up riding at the top of these bands. In some ways, I still kind of feel like in terms of the way that Wave Magic usually works, usually you want some consolidation, like maybe here at least, and then to come up. But that's not entirely necessary. It could happen though, like especially since I'm kind of predicting that Bitcoin should be a bit bullish over the next, let's just say 2 weeks, maybe 3 weeks. It's possible that Monero could keep its stable coin levels, right around 210, 220, while Bitcoin goes for maybe 100K one more time, and we could see this thing come to the downside. So I wouldn't be super bullish on this particular chart over the coming weeks, although obviously I'm bullish on it for the years and decades ahead, especially when Bitcoin crashes because of the security budget. Just kidding. I don't think it'll crash that soon. Let's see. We did Monero versus gold. Gold has just been on a crazy run. So this chart, I don't know. I guess expect this chart to come down here to the 49 level. So that would just be the price of Monero divided by the price of gold. Let's see. Do we have anything going on interesting with the Monero dominance? Dominance actually looks better. Excuse me. Monero dominance actually looks significantly better than the Monero versus the Bitcoin chart. Typically, I don't see things come from the downside and then just ride the blue bands up immediately. Again, usually you have some kind of reaction consolidation period to the downside, but not always. So this chart actually does look pretty bullish. Both the shorter term and the longer term blue bands are already upsloping now, right? There's a positive slope to that, which sort of gives you this zone, sort of gives the ratio, or sorry, the dominance, this zone to ride in. So hypothetically, we could actually see very good things from that. And that might even imply that not all is well in shitcoin land. So, but what else is new, right? Okay, we can look at the privacy altcoins. And I think there was a mention of Xano earlier on the price report. And hey, look, some people have decided to buy some Xano. I don't know who exactly. Maybe Mr. Ver is topping up his bags, or it could be someone else. Maybe it's Sal is topping up his bags. I don't know. Anyways, yeah, here's the chart. I keep telling you guys I'm not going to tell you where I think this chart is going because I'm not going to be the reason this chart moves. So you guys are going to have to decide on your own and put together what you think is happening based on the other stuff I've told you about, the wave magic, as it's colloquially known as.
Tell us, Bonnie. Tell us.
No, I refused. You'll have to pay me. No, I'm just kidding. Even then, I won't tell you.
What will the prices out of be at Pork Fest? Can you make that prediction?
When's Pork Fest?
June 20 something.
Oh man, that's way out here. No, I can't. I actually can't tell you.
June 16th through the 22nd.
How about this? I'll tell you that Xano's price will be somewhere above $2.50 and below 16.5. I'll give you a very specific target range. And maybe if you just take the log, it'll look a little bit more specific than it currently does. For math nerds out there, they might get that joke. All right, so there was Xano. Firo is still having a lot of troubles down here, kind of consolidating at this low. It's probably seen for now, unless the whole market's about to tank, it's probably seen its interim low. So probably Firo will find some means to get back up to the standard deviation levels. Notice these guys that kind of curved down. Firo crushed to the downside, and now it's probably going to find an opportunity to get into this zone right here at some point. Could be next week, could be in a couple weeks, I don't know, but usually that's how I'll see these things play out. And it does seem like the rest of the market has put in a temporary bottom. So that seems all right there. Pirate Chain is managing to hang on.
Buddy, you're breaking up a little bit right now. I don't know if it's just
Oh, no.
me hearing you on my end.
He sounds fine to me.
Okay.
Okay, well, that's good. That's good to know then. Maybe might want to reload your connection. That could potentially help. I don't know. But I don't know if that will kill the stream if Doug reloads. Well, anyways, okay, so here's Pirate Chain. We got Pirate Chain. That's the weekly. Let's go to the daily. Yeah, so Pirate Chain is managing to hang on here. It broke down this this lower pleb line. So we're looking at a descending wedge structure here. I still think this structure is meant to break down. This chart looks terrible, horrible. It's the worst. Nobody likes it. And I mean, maybe it'll recover, maybe it can recover, but guys, this looks terrible. It's really bad price action. So personally, I wouldn't be messing around on that chart. Maybe you could get lucky, right? Maybe this chart could get lucky and then make a run for like another 100% here. Crazier things have happened. So I guess that could happen. I don't know, but I personally wouldn't mess with it. There's other opportunities. There's better opportunities in the market than Pirate Chain in this moment. Yeah, sure, Pirate Chain will probably have some kind of big run at some point, when the liquidity expansion happens. But until that point, man, I just don't want to be messing with this coin. It's like it just doesn't. Whatever. We've said enough there. Let's go to Zcash. If my charts will work, there we go. Zcash. We're on the weekly. Let's go to the daily. Basically holding steady, hasn't done much for the last week. It looks like we might have had a drop off here. When was that? Saturday, Sunday. Oh, okay. So actually the day after we got off the horn last week on Sunday, Zcash made let's see, what is that? 12% drop. And now it's just kind of stayed down there. Yeah. Zcash chart is interesting. It doesn't seem to like mirror too much the rest of the crypto market, or at least it hasn't been lately. I don't exactly know why that would be, but anyways, it seems, I don't know, it seems dubious. Maybe it's fine. I don't know. I wouldn't trade this one at the moment. We could drop into shorter time frames and like maybe try and find some kind of signal there, but yeah, we're not really gonna bother with that at the moment. Monero transactions, actually I was a little bit disappointed in everybody. I don't know what's going on here, guys, but why are we down at the 20,000 range here at the moment? We were good last week and then things kind of dropped off and kind of a little bit in this lower spot. So I don't know. Hopefully, maybe this ends up being a little of a bottoming structure, and then we come back up to the top side. Don't worry, guys. Crypto is coming back. So if there's any noobs on the show, if there's anyone new to crypto, new to Monero, you can continue to use it and spend it. So the joke used to be, do not buy Monero, just use Monero, which is kind of a cheeky way to say, hey, we're not just merely price jerks that want to get rich and tell everyone to buy our bags when we don't actually use it, or make claims about how scalable it will be in the future, right? We're just like, hey, use it, max out this chain, please. Okay, anyways, blah blah blah. What do we want to talk about, Bitcoin first or the macro? No, let's go to the macro, because we can start with gold, and gold is done fantastic. I mean, I don't even know what's going on with this guy. It's like there's got to be fundamental stuff, reasons for this chart to be doing this, but gold has just been crushing it. I'm trying to pull up some statistics, but my charts are being stupid. All right, how do I I know this is retarded, but there is a way to add an indicator, and usually I just press the / button. Where indicators? I guess this must be it. All right, well, that's really bad. So I guess my chart is frozen there on gold. I won't be able to add the statistics indicator that I want to, but it's hanging out here like at like around 3,500. So it looks like gold is going to go for that post haste. Maybe there's like a fundamental thing going on here, right? Like maybe there's really like some kind of bigger fundamental problems in the economy, and I kind of think that there are. But gold has been on a tear for longer than that. So I don't know. I mean, okay. I mean, I guess congratulations to everybody that has gold here. Man, I really wish that I was really hoping that indicator would pop up. I'm using ungoogled Chromium here instead of LibreWolf because of all the LibreWolf, the dubious things that have been coming out of LibreWolf lately, like banning Lunduke, who is just awesome. Okay, anyways, let's go to oil. We'll look at the macro on oil. So we're basically in that danger zone. We're still in that red zone that we talked about. Although oil does look like it wants to have some recovery here. That's the weekly, right? So I mean, big term, big picture. Oil is actually like it's pretty low. Like this is the lowest we've seen oil since when the economy caught a cold back in 2020. So yeah, oil is hanging out in what we call the red zone. or what we've been labeling as the red zone for like potential for crash. But again, you got to kind of realize my thinking has slightly evolved on this. Like, yes, it's the same thing as a macro crash. It's like the same underlying like things driving this. It's just going to take more and more time. I mean, we'll look at the stock market here in a second. Actually, let's look at it right now. So yeah, the stock market is still like having kind of woes and troubles. So this is the NASDAQ. And I mean, the NASDAQ dropped by a total of 25%, 26%. That's big. Like, that's a huge drop, especially to do it in just a month, right? In the span of I guess it was more like a span of 6 weeks, but that's still a lot to drop. You know, like that's almost the amount that we dropped for the entire bear market. Back here, if we come back here, let's do that measurement. 37%, right? So the bear market NASDAQ was down 37% overall. You know, but it took a while to get there, right? Like that was the better part of one. Well, I guess it was just 1 year. Yeah, it was basically just 1 year. So anyways, yeah, I mean, this thing has dropped quite a lot. And this definitely, you know what I need to do? I'll do it next week. We need to overlay the 2008 crash, what the NASDAQ looked like in that crash. We need to overlay that on this chart and see if we can see any congruency there. It's a dubious thing because humans are really good at pattern detection. And it's kind of like AI. AI will spit out an answer that sounds like pattern recognition, even though it'll be dubious and wrong. And the human brain, believe it or not, is very similar. It does very similar things where it'll see patterns even where there is none that exists. And you can statistically say, no, this is stochastic, right? It's just noise. There's no real pattern here. So, but knowing that, keeping that in mind, we'll overlay the S&P 500 on this next week. We won't get into it today because, you know, I'll have to like look at that and play with that a little bit before I try to make any dubious speculations here live on stream. Anyways, yeah, it does look though a little bit like the NASDAQ might be trying to stabilize right around these blue band cluster areas. So maybe next week we'll see a little bit of rebound towards the upside. This isn't the cleanest wave magic chart that I've ever seen. So you know, maybe it's not. You know, I don't really have necessarily any great levels to show you guys, except for maybe that blue band cluster right there. Hypothetically, we could see things go for this for that spot and then make a reversal down there. But you know, we'll keep that. We'll play that in real time and see what we think about that. Let's take a look at the S&P 500. Also, still you know, still having problems. So the S&P 500. There we go. The S&P 500 dropped, and if my things are working today, please. Maybe I need to go back to LibreWolf. S&P 500 dropped 21% from the top, and currently is down 13.5%. So, you know, I mean, this is, again, guys, this is fundamentally different than the other pullbacks that we've seen. You know, like S&P down 6%, S&P down 9%, right? The S&P dropped 20%. That's significant, and the NASDAQ dropped 26%. That is a significantly different event than the kinds of events that we have had, you know, on the way up for this bull market that, you know, for the past few years here, ever since the bottom in 2022. So again, you know, this wave magic chart does look a little bit cleaner to me than the last one. So we could be looking at this level, right? That would be a spot to expect some capping action, maybe playing this zone for a little bit and then perhaps drop down. I do think that the direction is still down overall, but I do think over the short term, next week or so, we're probably looking at bullish, positive pressure here on the market. So for those of you that want to trade that, play that, you know, do that, get that shit, right? Make that play, take the leverage, do all the stuff, etc. Okay, reverse repos have made their way back down actually. So this chart's actually pretty crazy, big spike. We were in an uptrend and then things came back down. I guess, guys. This chart is like when things start to go towards crashy, this chart wants to pump towards the upside, and especially if the crash is expected to be short term. And there's been a lot of insider trading going on. We know that it's like always insider trading. Nancy Pelosi and, you know, the Republicans and the Democrats hold hands as they inside trade the congressional insider knowledge. And lately, you know, first it was Biden, right? And his administration was doing it. They were using the Ukraine. I know it's not the Ukraine, but they were using Ukraine to funnel money and do laundering and all kinds of stuff. And they were just like doing their own thing, their own insider trading. Now you got the Republican version of insider trading, which is more shitcoin oriented, right? So this is the difference in the Republicans and Democrats. Democrats are like, ban crypto and prosecute them. And the Republicans are like, nah, just, you know, play the shitcoin game. Apparently I'm speaking a little bit whimsically here, but, you know, that's kind of what I'm seeing. Anyways, reverse repos are back down. They're still 58 billion. So hypothetically, if they wanted to dump 58 billion more dollars into risk, they could do that pretty quickly. The institutions, whoever it is holding 58 billion, the aggregate of them on the reverse repo in the Federal Reserve Bank, this would drop to zero, and that might actually, we could maybe use that and correlate that and say, hey, if that happens alongside sort of key levels in risk markets, we might say, hey, this is a turnaround spot, right? This is the rebound bounce. Nothing goes down in a straight line, nothing goes up in a straight line. But we might be able to corroborate this chart if it wants to go all the way to the bottom here towards zero, and then we could say, hey, this looks like a spot for a turnaround. So I don't know. We'll take a look at that in real time. Just know that'll be on my mind. Excuse me as I drink my drugs, my coffee, my caffeine, hard drug. Dollar index has been falling, and this has been another way that we could say, hey, people are getting out of dollars, right, and they're going into the market. So usually dollar index is anti-correlated with stuff like gold and stuff like the stock market. So this thing has been going towards the downside. I think we talked about this last week. I said at this point, this thing is basically kind of broken down, and this is a weekly chart. So we've confirmed a couple candles now below like some critical levels, and I would expect for it to go to this very long-term line down here. So currently dollar index sitting at 99.2. And I would expect it to go down to like 96 probably. That would be like a reasonable spot to look for. Let's play with this horizontal area of significance. Yeah, so dollar index is definitely showing breakdown even from like the lowest horizontal level on the left here that happened back in like 2023. Anyways, yeah, dollar index looks like it's going to keep going down, which would be corroborating towards the gold continuing to go up and markets now S&P 500 and crypto doing some kind of reaction, rebound, bounce. Okay, let me make sure, check the chats, check the super chats. If Tux, if you want to put dubious speculator, we can put him up here. Actually, you know what? I have a different chart with gold. We'll go there. Dubious speculator tipped 25 cents. He says, for body, at what price does gold need to rise before he panic buys all he can get? Yeah, I'm not panic buying gold, bro. I'm actually looking to pre-panic sell it. In other words, when we hit this purple line right here, this guy right here, I'm gonna have a really hard time not selling a significant stash of my gold. You know what I might do actually at that point? I think I will rotate into silver. In fact, this is actually a really good thing for us to talk about. So, all right, this is the gold chart right here on the top left, and this purple band, as we've talked about before, this is kind of a derivation of standard deviation. Right? It's not standard deviation. It's the same idea when you take a derivative. If any of you know how to take a derivative, you find the slope of a curve, and then you take the second derivative, right? So it's like first you get velocity, which is the derivative, and the second derivative becomes acceleration. So this purple line is kind of an acceleration metric, if you will, for standard deviation. You basically take the moving standard deviation of the moving standard deviation. So as those bands start to expand, the purple line responds even stronger. And I needed that to characterize markets that were like highly continuously exponential. And it's been just incredibly useful. I can even show you like in the way in which this purple band was useful. See this right here? Back in 2011, this purple band was effectively the place that gold topped out at. And so you could see, hey, that's and I see this over and over and over again on charts. Why this works, I don't know. I can't tell you why. I just know that I've seen it over and over again. That this purple band is a really good, useful tool for that. Or purple line, I should say. And the other thing to keep in mind is that it calculates this continuously over every single previous candle. So like, for example, on this date here at the bottom, 2011, August 17th, it uses every single candle of the chart before it to calculate this purple band. And on the next candle, it does the same. So it's not like a moving, it is a moving standard deviation derivation, but just like the blue bands are moving, it's the same thing for the blue bands or the blue lines down here. I know that's wordy. Those of you that know stats, I think, and know charts and whatnot, probably you'll understand. The rest of you, I'm sorry, you'll just have to take my word for it. Okay, anyways, yeah, so I'm gonna have a hard time, bro, not selling this, Mr. Dubious Speculator. I feel like I should read that in the voice of Nixon, right? The dubious speculators. Anyways, yeah, so we're going to hit this band, and I don't know what I'm going to do. I'm probably going to rotate into silver. Maybe not all of it, but a big portion of what I have, I'll probably rotate into silver. So let's put the same statistics summary on this chart. Let's go to the weekly. Oh, wow. Okay, so we're already at the purple band on this one. Just know that only in some cases does the purple band act as like a hard capping point or nearly like a very solid area to look for topping action. Not all charts is that the case. Okay, some charts it won't be like that, but for this chart, I don't think that it's like that. In fact, you can see that it's definitely not this ratio here. So it's kind of like, I know it's kind of arbitrary for me to be like, well, you just got to know what you're looking at, but it really is the case. The point is here that the gold to silver ratio is sitting at like 102. And historically, that is extremely, extremely high. You know what? Let me clear the wave magic because the wave magic isn't useful for us right now. Yeah, let's just look at the raw chart here. So let's drop a horizontal line right there and go back. You can see that we've only ever been this high 1, 2, almost 3 times, right? So 1942, okay. And then the gold to silver ratio in 1991, where gold was just crushing silver completely. And then again, in 2020 recently with the whole thing that happened. We're not allowed to mention it still. I don't know. Maybe we are now. I guess Trump's in office, but Google is still a leftist corporation. So maybe they'll punish me for saying the C word. Anyways, yeah, so we're hanging out here at 102. This is the zone where you would flip your gold for silver. Now, ever since the demonetization of silver, the chart has long-term been bullish, right? This thing has a bias towards the upside. However, again, things don't go up in a straight line, and these are solid levels to flip your gold into silver if you wanted to do that. So I will probably wait until like a little bit higher, right? Until just a little bit higher on the gold chart until we get, let's see, what would that be? 5% higher, right? So at that point, I will probably flip into silver. It's dangerous to do that. It's always dangerous to flip into silver. Silver's risky, right? But maybe it'll be less risky than gold,
Come
right?
on, silver, make me some money finally.
I mean, at some point, right? You would think like this is weird. This is weird action because it's usually it's like cryptocurrencies, right? Bitcoin goes and then the alts go, and silver's just the altcoin to gold. And so usually once gold shows that it's in a bull market, silver follows and beats it, but it hasn't done that, which is crazy. It's crazy. So there's
They're
probably
suppressing my silver.
They are suppressing my silver, bro. Your 1965 junk quarters are like they just hate them. They don't want you to buy milk for a dime. For a silver dime, they want you to buy it with inflating fiat currency that you have to work harder and harder to earn. Excuse me, sorry. Okay, so yeah, I think that's a play coming up here, guys. I think that everyone should be watching this. If you have a lot of gold and you're not sure what to do with it once we hit these key levels, probably a portion of that flipping into silver is responsible. You could probably also buy like a house or some land or something. Let's see, anything else on the macro here? Probably not. Oh yes, of course, I'll with bonds. Nothing happened with bonds as always. So yeah, bonds are actually going up. The rates are going up. The curve is renormalizing more than anything, right? So the long end of the curve and the darker colors here, the darker blue, the longer end of the curve has been moving towards the upside. So interesting stuff. It could be that China is selling bonds. It could just be that people are selling bonds to get back into the stock market for the next pump that's probably coming, like I think. Let's take a look at the yield curve inversion. Yield curve continues to uninvert slowly. This is crazy. We've almost never seen a yield curve inversion that happens like this that hasn't caused some kind of significant market crash. At this point, you could even, again, 25% is pretty significant. Like that's not just your ordinary crash. I mean, yeah, you get periodic bear markets. You do through the long-term history of the stock market. Yes, that's not too crazy. 25% is nothing, but it doesn't happen that often. So you could even say that that this has been true. This has now been validated once again that the yield curve, as it starts to go from heavily inverted to uninverted, that it does tend to cause market crashes. Right? That's effectively been proven now. What's crazy though is that it's still not totally congruent because we haven't seen the bonds fall off. Right? We haven't seen bonds do that yet. So that is kind of an incongruency there. That doesn't mean it's not coming. It just means that this shit takes a long time to play out, guys. Like, I mean, it's hard for me. I sit here and talk about it like I'm waiting. The macro crash is coming. It's here. It's happening. And you're like, yeah, but it happens for like 9 months. So you feel like I don't know, like that dude on Austin Powers or whatever that's just like screaming at the car that's like coming super slow from 30 meters away or something. I don't know, whatever. Anyways, like this macro crash from 2008, you can see this shit got kicked off, got started at the early. It really the markets were topping through this zone here. And then for all of 2008, so from here all the way to here is where the macro crash happened. And that was just like a big event, right? So that happened that was like a 6 to 9 month event. So anyways, just know that, yes, I am aware that it sounds a little bit like the boy who cried macro crash, but the truth is that we it kind of already got started, right? It's already in progress. And it's just so slow that, they can boil you maybe not 1 degree at a time, but they're boiling you 2 degrees at a time if you're in the stock market right now. So, okay, we had some inflation numbers come out, actually pretty good numbers. So this will give the Federal Reserve bureaus the opportunity to lower rates when they need to. So you can see that total inflation is now at 2.4. And the core inflation is at 2.8. So he said that it would be sticky. It kind of was sticky, but it seems to now finally be responding. It's kind of like finally coming down. Prices are never coming down. Prices are going to stay where they're at, but at least they're not going up super fast anymore either. So almost back in trend, right? Like this would be your trend for the past, say, decade, 2 decades, right? So almost back in trend, not quite. But that's good because that means that JPOW can lower the rates later when the macro crash really gets kicked off. So with all the macro stuff in mind, we can take a look at the Bitcoin chart. My thinking here is that just from a technical analysis standpoint, so we've got the, sorry, I'm trying to size the chart here. Okay, so we've got the orange bands here, right? They came to the downside. You'll notice that was capping action, capping action, capping action. That's enough times. That's enough capping action. Bitcoin has proven that it wants to go to the upside. It's getting bullish. Maybe they could do a fake out down here and then do this, or it could just go, right? It could just do this, and then go. We're targeting for 100,000, guys. If you're a trader, you're looking for 100,000, and that's funny because it's a round number, but it's also where the standard deviations are currently existing at. So anywhere between, let's just say 98 up to about 101. That's your target area to sell. If you're long, you would sell at that area. And then if you get anything above that, right, you would do a short here. Hang on, let me get rid of these lines. Do this again. You would take a short here and then here right at the very top of those lines. You might put like 2 short orders in, right? So you would get short there and then you would get short with a little bit more leverage up here would be the idea on that, at least if I was trading the wave magic, astrology, tea leaves, nonsense statistics that don't matter and don't count and are allegedly useless, but somehow still seem to work. Yeah, so anyways, that's the way I'm going to be playing this here. Bitcoin's probably going for a little bit of bullish action now. It's just written in the stars, guys. It's not, I don't make the astrology, I just analyze it. Okay, so Bitcoin looking good there. Bitcoin dominance, I guess, if Bitcoin, I think the markets are kind of breathing a sigh of relief, and I think that Tron here, so Tron here in green has pumped bigly, and also BCH is doing quite well at the moment. So I think that these are signs that we're going to see some rotation into alts. I think this would be, if the chart will expand, there we go. I think this would be a good temporary stopping point for Bitcoin dominance to see a little bit of dropping, like a little bit of this action right there down towards the bottom side of that channel. So probably, probably at least some alts are going to perform better than Bitcoin. I don't know which ones. Choose your own alts. I'm not going to get too much into alts here. I think that's about everything, guys. I don't think, unless there was comments that I missed. I don't think I see any extra comments here. Yeah. Let's see. Exam on YouTube says all my models are broken. Are they? Yeah, I guess so. Maybe. Not yet, but maybe they'll break. I mean, that's, yeah. So anyone that, like, I laugh at this, and I'm pretty sure Exam R on YouTube is just making a joke, but the maximalists, they're always like, Bitcoin's going to break all your models. And it's like, well, bro, I know stats better than you do. I understand where models are useful, and I understand when they're dubious, right? Like, usually in steady state situations, models are really good. You can define processes, and they can, they'll usually stay somewhat close to those processes that you've defined. If you've done your math right, if you've done your statistical checks and said, hey, this actually is better than chance, the p-value and the RSE, right, the residual standard error, stuff like that, depending on what tools you're using, the R squared, et cetera, like you say, hey, all of these are in statistically significant zones, and I can prove that this current mathematical equation is better than chance. Will it stay that way forever? If things fundamentally change, then obviously your model's going to break, right? But when things are fundamentally doing about the same thing that they've always done, you have some short-term extrapolation power that's better than chance. And so that's the whole point of using statistics, is you're just trying to find yourself a little bit of edge, a little bit of advantage. So, I guess we'll take a look here. Might as well, since we're talking about this. We'll look at the regression. Man, my computer does not want to, or maybe ungoogled Chromium just is not the right. Maybe it's just not the right browser. I don't think there is a right browser. I don't have Brave on FreeBSD, so unfortunately, I can't use Brave. Let's go to BTC.
Buddy allows himself to suffer in the pits of BSD.
I'm not suffering, bro. I think it's just, I mean, I don't know.
Got another super chat from Dubious Speculator.
Oh, dude, okay. Dubious Speculator tipped another 25 cents. He says, I will ask Body one more time. There is no possible price that would move him to forcibly buy it. Bro, I've got gold. Like, I have gold. I'm telling you, like, gold has been a stellar performer for me here. The overall biggest thing that I do is I reallocate assets. I say, hey, what has changed in the market? Where is there an imbalance in my portfolio? Right now, gold is performed amazingly, and it's not quite at an imbalanced level of my portfolio, but it kind of is. So I'm really just looking for the opportunity to rotate into something else. It could even be silver, but it could be something else, right? I don't really see anything out there that I like all that much. But no, I mean, like, I'm not just gonna, bro. Here, I hate buying stuff that has gone up a lot, even if it's gonna go up more. I absolutely hate buying stuff that has gone up too much. I want to get in at the bottom. Like, I hate buying things that already did a 2x or a 10x, and even though it might do another 2x or 10x, I'm just like, God, I might smash the buy button sometimes on assets
Body
like
does
that.
not buy into FOMO.
I just don't. It's too risky, right? If I buy after things have just utterly crashed, and then I say to myself, maybe it could crash some more, but there's a really, really good chance it at least gets back to this level. I've given myself the absolute best chance to make gains, right? And if I haven't positioned myself ahead of time, I don't chase into gains. I can almost never do it. So, yeah, there is basically no price. I will always keep some gold, whatever physical I have. I'm just going to hang on to that forever, unless some crazy macro event happens and gold is like $100,000 an ounce or something. Okay, then I'll go buy a city block or whatever, and probably a monocle and a top hat. And you guys can hate me for being a capitalist, or maybe not you guys, but the ANCOMs can hate me. All right, so just finishing off here on that whole stats thing, on that whole comment, like, this is Bitcoin's price boundaries for the current, like, this is the green line is the lower boundary and the red line is the upper boundary. These mathematical equations perform better than chance, and I can prove it. And they were incredibly useful. I didn't even use this data point right here to define the red line. I only used this one in 2017, this guy, and then, actually, believe it or not, way back here in 2010, the first blow off top. That was a useful data point. I couldn't even believe it myself when I looked at it, but it's super important to include in this chart. Anyways, unless the dollar fucking dies, right? Unless, like, real World War III kicks off, like, things are effectively steady state. If the C word event didn't cause this chart to deviate, and printing 25% of the M2 in 1 year didn't cause this upper boundary to deviate, then nothing except for, like, major shit, like complete devaluation and utter collapse of the dollar is going to change this chart. So anyways, I know people are like, all your models are broken, and I know exam R was just joking. But yeah, like, right now, this model is not broken. This model is extremely useful, and I'm going to continue to use this model unless I see something that's just absolutely fundamentally spectacularly different than what we've seen in the past. And maybe I'll be wrong, right? Like, maybe I could just be wrong, but statistically speaking, I won't be. So that's how, I mean, you got to do things that give you the best chance for gains and for wins. So anyways, yeah, long-winded way of saying why I use astrology for dudes. So that's all I got for you guys today, unless we have some questions or anything.
No, I think we're probably good. I didn't see any other super chats.
Yeah,
Cool,
no questions
cool.
on my end.
Yeah, overall bullish this week. Next week, I would be bullish. I'm looking for a swing back on the upside for these markets.
So I guess, just like, I mean, you kind of already said it, right? But bullish, but you're more bullish for Bitcoin or alts right now?
Oh, I'm probably more bullish for alts right now. I wouldn't necessarily say it's a huge difference, but I would expect alts to perform a little bit better than Bitcoin right here. Bitcoin, here's the thing though, Bitcoin has been so strong, like, it might have its own kind of, like, self-fulfilling prophecy, if you will, which it's not really a prophecy, it's more of a short-term kind of thing happening. But, like, people are like, man, alts really haven't performed as we never got our alt season, and at the moment that it looked like we might, we didn't, right? It reversed on a dime and went up. So it could be that people are going to be antsy, and maybe alts just aren't going to perform. Maybe this chart doesn't actually go down here. I would still, I'd go 50-50, right? I wouldn't be 100% in Bitcoin here. I'd give yourself some opportunity for some extra some extra pumpage. Go with the popular alts that are used for degenerate stuff. I won't say which coin. I think everybody knows which coin that is, but that coin's probably gonna do reasonably okay.
Wait, which I missed you out. Which coin are you referring to?
I don't want to. A coin which shall not be named, but is currently being used for degeneracy. It's the prime location where degeneracy is taking place, and
Solana. That's Solana. I don't touch the stuff. I don't touch it really. I mean,
it's a wallet, isn't it?
Yep. We do have. You can hold all of your degenerate shit coins right inside Cake Wallet, nice and safe, nice and secure.
Listen, if that's what people are doing, and they're like, I love chainmail and memes, I can respect that. At least it's honest, right? It ain't much, but it's on. It's actually quite a lot. There's so much money wrapped up in that stupid shit. I don't really do it, right? I'm not a meme coin connoisseur by any means. But some people are, and at least they know what they're doing. They're like the autism is meta, like they know what they're doing. So it's like it's better than launching some like fucking Ada Cardano. It's better than launching some coin that will never be used for contracts and changing the world, but they fap like it is. And this 30-year-old bearded man pretends like he's 55, like he went to these Grateful Dead concerts and all this nonsense. So at least I can respect Solana and meme coins for being honest.
What do you think is the potential fail scenario here? Like where, macro, something breaks and then we go back into, continue the bear market.
Well, the fail scenario is
there's still a lot of uncertainty right now. Like Trump is trying to literally eliminate Powell. I think that's going to happen. I guess that would be bullish because then that means we're printing more. We're going to start printing more money, right? We're going to lower the interest rates?
It hasn't happened yet, so we can't really, we'll have to, I mean, that's speculation on what might happen. But at the moment, the way the economy looks, like the case for the macro crash these slow rolling is still here. We had negative GDP last quarter, or I should say the Q4 of 2024. There's a really big chance we have negative GDP this quarter. Because tariffs have been off and on, actually, for most of this quarter, previous quarter, Q1, tariffs have been in effect, right? And the tariffs are even higher now. It's 10% across the board for everything. So there's you're detracting from the balance sheet of these companies, right? That are affected by tariffs, and it's all of them. Plus, you had the AI hype. It's kind of maxed out for a little bit. You have guys like Sam Altman, OpenAI, and they're saying, hey, we pretty much hit that ceiling where it's we could add 100x more GPU compute to the training here, but it's not going to cause us to get that much more gains on how good the AI is. We have to do architecturally different things with these neural networks now to make them perform better. So, just in general, we are still looking at a situation of slowdown, right? Maybe it's not as horrible as it seemed at first. It might not be, as crashy crash as it was when Trump first came out with the tariffs, but that was just a 90-day pause, right? We're going to revisit this in another 2.5 months. We're coming back to the same spot, and we just have to see from there. But there are still fundamental headwinds against the economy. There's we still don't have the big expansion of liquidity necessary to drive this thing to truly new epic heights. So we've got this languishing going on here. So that's why this macro crash is still on, bro.
Right, and it does look like we could enter a very serious recession. Right, economy can tank. People won't be able to pay their mortgages, type thing.
I mean, quote me on it. I say we're already in a recession. It's already here. The recession is already here. It just won't be apparent until after.
It feels like it could hit harder than people are thinking. With the tariffs affecting every purchase that a middle-class person is making while trying to maintain their homes, their mortgages. A lot of people are locked into low interest rates with their mortgages, but there's a lot of other expenses that are going up, and just for maintaining a house. So, if that starts to slip, housing market starts to go, I don't know. I do feel like we're on the precipice of that. I don't know. I mean, unless Trump eliminates Powell, or Powell can't handle the pressure anymore and just starts to lower interest rates, and then I guess that changes everything. But
I guess we'll have to wait and see. Powell doesn't
what
sound like he's opposed to lowering rates, though, when the time comes.
Right. He just doesn't think the date is there yet. But what is this scenario where we lower interest rates, but the 10-year, the still essentially, I'm hearing like the 10-year could still potentially go up, right? If everybody's like selling the dollar, right? If the dollar is being sold by China or whatever, and then effectively interest rates for things like homes and stuff wouldn't even go down.
I haven't thought about that too much, but just sort of brainstorming.
I have heard that scenario, and that sounds like a disaster. So like we'd be lowering
China holds some amounts of U.S. bonds. That's true, but I don't think they hold nearly as much as they used to. If China sells their bonds, then yeah, that pushes the price of bonds. That pushes the rates higher. But you have to realize too, if the economy is crashing or if the economy is in this bear market, recession, whatever, then you're going to end up in a situation where institutions, American institutions, family offices, et cetera, are going to be exiting risk markets for safety of bonds. And currently bonds are, the long-term yield is nearly 5%. So that's pretty good. Like that's really good. Like if you have a big chunk of money and you're just holding bonds and you're getting paid 5% per year for that maturity, that's really good. So that action of U.S. Institutions and maybe probably European institutions as well, buying U.S. bonds, that would tend to push the yields lower. If if the Fed is going to lower rates, it's just very likely that the rest of the yield curve is going to follow it. It always has. Like I know that that's a little bit dubious to say, well, it always has, so it always will. But the simple fact is that the yield curve is always followed or anticipated where the Fed was going, right? So sometimes yields start falling before the Fed moves because everybody knows the Fed is about to lower rates. Like you can see this here back in 2000, yields were already coming down. The Fed then lowered rates because everyone knew the Fed was going to lower rates. So the bond market, actually, believe it or not, despite being really boring, does have these kind of intricate sort of feedback and feed forward mechanisms that affect yield prices or yield rates.
The bonds. So complex.
My bonds.
UTXO tip 25 cents. Did we hit this one?
We
Salt
did not.
is no longer money. Neither is silver. China was among the last to realize this and got burned. So now they're going all into gold. That's why the GSR is so high.
Yeah, I think that's a very good point, UTXO. Silver's demonetized. It's not coming back. Not anytime soon, at least.
Has the dollar topped?
What do you mean by topped? Like the
in terms of its dominance, right?
Oh, yeah, gotcha. Maybe in relative terms, probably not in absolute terms, because the economy is always in general, in long term, the economy is always expanding. But yeah, I mean, so just to touch on what UTXO said real quick. Yeah, that's a fundamentally the fact that silver is demonetized, people realize it's not coming back, and the move into gold, like that's actually a really good speculation or idea about why there's such a movement here into gold, why gold is doing so well. And as we talked about, that chart for long term has been bullish, right? The gold versus silver chart has been bullish for a very long time now, over very long time frames. So yeah, this chart is probably going to continue to be bullish over long time frames. Still though, like it's just in terms of trading and in terms of asset allocation, rotation, you would still look for opportunities to get on the opposite side of that, to try and catch a bid where silver outperforms gold for some period of time. But yeah, so thanks for bringing that up, UTXO.
And I saw some tweet. I don't know how accurate this is. I think it was a little off, but the idea still remains that the SIPS network outperformed Swift, had more volume, or is passing Swift. I don't know if that's actually the case, but just in theory, it seems it sounds like it's going up in usage, and it's catching up to Swift if it hasn't already. That seems like a big indicator as well that the globe is moving away from the dollar as the essentially medium of exchange.
Yeah, I need to look at that. Actually, I wrote that down just now to take a look at that. I can get back to you next week on try to verify whether or not that is true or not.
I mean, so overall, like big picture, it does feel like we're entering that transitional period where big shifts are being made as to what the store of value a medium of exchange will be for the world, right? There are always going to be competing ones, right? Obviously, the BTC maxis think everybody's going to be holding and using Bitcoin. There's going to be some mix for a very, very long time, but it does feel like there's been a big like step change that has happened or is about to happen, where the dollar has perhaps peaked in terms of dominance, and now the transition is happening, like a reshuffling of the deck.
For usage, let's see, for trade purposes, probably in relative terms, in terms of dominance, yes, that's probably the case for trade imbalances, for settling trade deficits. However, for reserves, the United States dollar is at the top, and it's probably going to stay there for a while. There's just no other currency that there's no other currency that people want to use for their central bank reserves other than the dollar. Like, yes, some amount of other currencies are kept on central banks as reserves, but it's the dollar. It's still like 54%. I need to verify that. It's been maybe like 3 or 4 months since I checked that, so we get new numbers, like slowly every quarter. So it just depends on what we're looking at. But yeah, I mean, I think you're right. Yeah, there is some backing off of the dollar dominance, but these things happen so slowly. So I wouldn't expect that necessarily to just fall off a cliff here.
I'm hoping for the fall off the cliff. Not that I want to see. I just want to see the transition. I don't want to see America get hurt out of this. My hope is that they respond, right? They pivot, right? Because if we do start to go through this phase change, it's a moment where Trump does the right thing. He could save the dominance, right? It would have to be things like pivot towards rebacking the dollar with gold, or some combination of gold and crypto. I'm kind of hoping for that moment, and then basically the dollar is forced to try to compete.
I wouldn't hold my breath, bro.
Yeah. I am the eternal optimist, and Buddy's the pragmatist.
I think we have a couple more XMR chats. So Vincent G
tipped, good TA guys. Yeah, as always. I think we have like the best TA guy in the game. I don't know. I feel like Buddy's misusing his math skills by by using them for this. But I don't know. It's obviously well worth it if done right. Meta tip 25 cents. Can we ask Bawdy on his philosophy of prepping? How far does that extend to?
My broad philosophy of prepping says spend 5 to 10% of your effort as if things might crash. Spend your other 90 to 95% of your effort as if things are not going to crash. Because like 99% of the time, things are not going to crash. Like whether that's, prepping for the apocalypse or prepping for a market crash, etc. You really want to just assume 95% that things in the next 10, 20 years, 30 years are going to be the same as they've always been, relatively speaking. And then you just that little extra 5%, that little extra 10%, because in a true emergency scenario, a little bit of prepping goes a very long way. However, let's suppose that you spend, 50% of your efforts prepping. It could very well be the case that some emergency event happens and then your shit just gets confiscated. Some roving band of marauders, thieves come just take all your shit, right? And what happened? You just prepped for them. Or it could be the government, right? They're like, hey, this guy has been building a bunker. We need to get underground. Just go take his bunker. Go get some guns and get in there. So yeah, I mean, you just need to understand that like in truly emergency scenarios, crazy situations can happen. So prep a little bit, but don't prep a shitload unless you really just have some alpha and you really just know that it's about to go down, right? Okay, in that case,
Sheldon tip 50 cents, Buddy. I suspect the Fed is wait, did we get this one already?
No, I don't think so.
I suspect the Fed is no longer the sun, but now a planet orbiting the banking system, and interest rates are actually a result of interbank counterparty risks. Banks make their own liquidity, and the Fed is not that in control. It
is the case that banks print like 90 or 95% of the money. So people are like, oh, the Fed's inflating, the Fed's printing money. It's like, well, they're providing the conditions by which money in banks can inflate, right? They're providing the reserves. They're providing the environment by which the banks can inflate. But with fractional reserve, the whole point is that banks are the ones actually deciding when to inflate. So there is definitely truth to that. But the Fed does kind of steer the ship, if you will. Like there's, they kind of give these broad conditional changes to the market.
And shortwave tip, 25 cents. Cake Wallet is finally back on F-Droid. Very cool. Yeah, I didn't realize it was down, or I guess, I don't know. That didn't cross my radar. So that's cool. Very good, very good. Yeah, and Cake Wallet's had a ton of updates. Background sync being one of the biggest ones that happened recently. It's not on iPhone yet, but it's kind of a breakthrough in terms of user experience with Cake. So very exciting news there.